you are going to more than likely see higher tax brackets in the future. I'm 62 and thinking about making sure my kids and grandkids are taken care of after I'm gone. How can I ensure that my estate plan keeps my wealth intact for them without being eaten up by taxes or other financial burdens? Well, Anthony, thanks for the question. The easiest way to achieve this is to have a full-on estate plan in place and to update that plan when there are significant changes to the tax code. So what do we mean by that? We're going to dive into that. And he does reference his estate plan. So, John, I think there's some general assumption from Anthony's question that he's made one. What that is, how detailed it is the first thing that we would want to look at. Does he just have a will? Does he have a will and a trust?
Yeah, and I think that's the starting point. But let's also talk about the whole taxation thing, because there is an estate tax in this country currently at about $13.5 million. That's the threshold. So if your estate is below that, you are not subject to, or your estate is not subject to estate tax or transfer tax from one to the other. Now, that doesn't mean that your assets will transfer without any taxation, especially if they are qualified assets. Scott, we've talked on this show many, many times about what happened with the Secure Act and IRA assets. That's a big concern if your wealth is concentrated in qualified accounts. And most people's wealth is concentrated in qualified accounts. Most average Americans, the 401ks, the IRAs, 403bs, those are where our dollars rest. And those dollars, when they are passed on to a non-spouse beneficiary, are subject to taxation over a 10-year period of time. Unfortunately, it's one of those things, Scott, that usually the people who are inheriting those dollars, they've had elderly parents. Yep. They're in their prime working years. They're in their prime earning years. And so all of that inheritance money over that 10-year period of time rests right on top of all of the other income that they're making, and it gets taxed at one of the highest tax rates. And so that's the challenge that you have there. And we've seen, some reaction to that, people thinking about using life insurance to create the liquidity to pay those taxes so they get all of that inheritance instead of, 20 or 30 or 40% of it or whatever that works out to. So I think that's kind of where we are. But everything's questionable going into 2025.
Yeah, and that, because that could sunset. So you're talking about the 2017 tax cuts that were enacted in the first Trump administration. If nothing changes, those don't get extended, that's going to sunset at the end of 2025. So we could be seeing a change in the estate tax exclusion, which right now is $13 million for an individual, so $26 million if it's a couple. But if it is brought down from there, which I think if nothing is done, it gets cut in half.
That's right.
It?
Yeah. There's some trepidation on the estate tax. Well, let's talk about the what ifs as far as income tax is concerned. There is a bill actually filed in Congress right now that would eliminate the income tax and replace it with a consumption tax or a sales tax, a national sales tax that would have some provisions in it for people that buying, essentials and things of that nature that you wouldn't be taxed on that. I don't know whether that has a chance, and where, of passing or not, but they're talking about it.
Yeah.
And so, I had a client come to me the other day and say, hey, I may want to, do some Roth conversions and all. And I said, let's just pump the brakes and see what happens for just a little while before we actually pull the trigger on that, because the worst case scenario in that, Scott, would be that you do a Roth conversion, pay tax on, $100,000 or something like that. And then next year they repeal the income tax. Right. And you go, man, I just paid all that tax for nothing.
Right. And you will have some time, you're going to have if anything passes, it's likely not to start at least till January 1. So you'll have some opportunity to do something about it. But to your point, and we haven't even mentioned the debt here, the U.S. debt we're talking about, not your personal debt. But as that continues to accelerate through the $30 trillion threshold, which is just wild to say, but you are going to more than likely see higher tax brackets in the future. So I also think for Anthony, this makes sense too. And we've talked about a lot of things here, but I think one thing that makes sense is to create a retirement income plan now. If you're at 62 and you're retired, you need a retirement income plan to begin withdrawing some of that money, begin to unwind those IRAs. I don't think there's ever been a more important time to have a plan to unwind your IRA. Now, people go, well, what do you mean? We're going to have to pay taxes on it. Yeah, but you can control how much you take out in a given year. When you pass it on to your heirs, the next generation does not have any control, very little, on how they're going to be able to have to withdraw that. So it makes sense to me to begin doing it now, and you don't have to spend it, because that's the next piece to it, right, John?
That's right.
People go, well, I don't want to. I want to preserve the wealth. Well, you can preserve it much better, honestly, once it's out of the IRA now than you ever have been able to before since 2020.
Scott, there is just a myriad, just a maze of all things that are possibilities here as far as the tax code is concerned, the economy and all of that. And that's why it is so important that you form a relationship with an advisor and work very closely with that advisor. We have ongoing discussions on a daily basis with our clients about things that are coming up and whether you should take advantage of it or not, and vis-a-vis whatever it is that your vision is and your goals are as far as your finances are concerned. We talk through those things on an ongoing basis. It is wise counsel that we are imparting to our clients as we see the landscape of things as they unfold, like what is happening in the current administration. We're going to look at this. We don't have a crystal ball. We're not going to know whether Congress is going to pass a repeal of the income tax, for instance, and a use tax or a sales tax to replace it. We're not going to know that. But when we do know that, then we are going to know what move you need to make with your finances. And I think that's where proper guidance is necessary if laws change, because once those laws change, you've got to be able to react to it.